Many homeowners still suffering from sticker shock when they look at their mortgages. In some cases, the rate can top 7%, which means many New York families are essentially priced out of owning a home.
Yeah, but local realtor and CEO of the Bizzarro Agency, Matthew Bizzarro, says relief could be on the way. And he joins us now with advice to score a lower rate on your home purchase. Thank you for being here.
Oh, it's always an honor to be here.
All right, so Matthew, how bad are mortgage rates right now? And can you put it into perspective with, I guess, a dollar amount?
Sure. It's really all relative. They seem incredibly high right now because we got so used to the very low rates over the past few years. But really, rates in the 6 or 7% range historically aren't all that high. Remember, in the 80s, people were paying 19%. But compared to just a few years ago, they seem extremely high, and that's causing a lot of turmoil right now in the market. If you want to break down numbers, for example, if you take a $500,000 home with a 20% payment on a 30-year loan at 7%, you pay a little more than $2,600 a month. If you drop that interest rate to 6%, you'll save more than $260 a month, which works out to almost $100,000 over the lifetime of the loan. And that's a real savings both monthly and over time.
Okay. So when the interest rates started going up, I think there was this thought that, okay, if the interest rates go up, then maybe we'll start to see how home prices go down, because as people aren't able to sell their home as easily, they'll have to drop the price a little bit, things will get cheaper, and people can buy more houses. But it hasn't worked out that way, at least not as far as I've seen. It seems like the home prices are still essentially high. They haven't really fallen, and then the actual rates are higher too. So it's like people are kind of frozen, at least from what I've seen. I'm not the expert. You are.
Yeah, there is a bit of that in the market right now. And frozen is a great way to explain it, because right now we're seeing buyers who are reluctant to buy because they're worried about how much interest they have to pay. We're seeing sellers that are reluctant to sell because they don't want to let go of the 3 to 4% interest rates they have to get a new loan at 7%. So now that's resulting in a drop in homes to sell. So we have a drop in homes to sell and a drop in buyers wanting to buy them. So there's a little bit of flux right now in the market.
Yeah, that just sounds like a domino effect. So the question everybody wants an answer to is there any relief in sight?
There definitely is going to be a relief in sight. The question is when, right? The current 7% rates are due partially to the debt ceiling crisis. And as banks started to question whether or not the U.S. would default on its debt, they started worrying about the economic losses they'd experienced if that happened. Because remember, a lot of mortgages are backed by the federal government. And if the country had hit its debt ceiling, that backing would no longer be guaranteed. But now that that crisis is resolved and we won't come again until at least 2025, it wouldn't be surprising for mortgage rates to begin to drop. Also, 2 days ago, the Federal Reserve paused the rate increase that it had been imposing for over a year. And that pause could result in banks also beginning to see reduced mortgage rates.
Yeah, so we all have to watch the Fed and see what's going on, because essentially the Fed has been trying to slow things down a little bit, be saying things are a little too hot as far as inflation and everything else. Let's try and cool the brakes by increasing the interest rates. So they're not doing that just yet. They're kind of stopping where they were, but they're not also taking things down either. So, all right, is there a chance that we could see rates actually begin to fall? Obviously, again, you're not the Fed. You don't know what they're going to do. We all are sitting, anticipating. But is there a chance that we start to see rates go back down to where they were, that 2-3% zone?
So I think the rates are going to begin to go down, correct? Now, when are they going to get to the levels that they were? That's probably a few years out, right? But I think there's a really important message in all this. And if you're a home buyer right now and you're searching, that you need to keep in mind that it's more important to secure the home than it is to secure the exact rate you want. What a lot of buyers don't realize is you don't have to lock in your rate as soon as you sign a contract. You can go up to 1 week before your closing date to lock a rate. So if rates feel like they're going to drop, or you're starting to talk about them dropping, you can actually wait and lock it when it gets to a lower point. With some of the home prices, they are depressed. Some are remaining steady, right, because of those rates. But if and when the rates drop, more people are going to come to the market, and that's going to bring prices up. So if you are looking to purchase now, it's more important to understand that securing the home, you can refinance in the future when rates drop, but you can't refinance overvalue, multiple bid, $100,000, $200,000 over asking price, purchase price.
Yeah. I mean, it's a lot to think about.
Yes.
For buyers and sellers, we thank you so much for breaking it down and for the good advice. Thank you so much, Matthew Bizzarro.
Awesome. Have a great day.
Yep.
And if you like to calculate your mortgage rate, check out Matthew's website, bizzarroagency.com.